Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday, the 8th of March. Starting off with the FTSE 100, where we're not so much as watching paint dry, but waiting to watch paint dry. Here we've got resistance at 7,700. Above that, we're looking for the top of the rising August trend channel at 78.40. On the downside, if we break below the 50-day line, 76.30, then there's a risk of heading down to the 200-day moving average at 75.40, but the RSI in the low 50s, and we've had a couple of bounces at neutral 50, so I suppose the glass is half full rather than half empty. On to the DAX, which normally has a good day on Thursday. As you're going to see, it also had a good day yesterday. Trying to get through the red line, resistance line there from September last year, 17,800 on an end-of-day close or a weekly close, to open up the prospect of 18,400, perhaps as soon as the end of this month, although we're allowing for the end of next month. On the downside, if we break back below recent support 17,600, there's the risk of 17,500, the mid to late February resistance. Moving on to the Dow, and here you can see that we've tried to get back into that rising trend channel. We broke that area around 38,900. There was the risk of testing 38,000 and perhaps the 50-day moving average at 38,200, but so far looks as though this market is pretty strong, as witnessed by the rebound for the RSI on neutral 50. If you're looking for the next leg higher, then that would be a break of the February resistance line that I've just drawn there, so 39,100 plus could then take us up towards the top of that rising October trend channel. That's currently heading as high as 41,000, and that would be a target for the end of next month. All eyes on Bitcoin at the moment, and here you can see why. We are looking pretty solid here at the higher levels, just below the record high that we made earlier in the week. The support zone around 65,000, now above that we're looking for 70,500 relatively easily over the next few sessions, maybe the next week or so. Downside limited hopefully now to 63,000 or 64,000 in fact, which was the initial resistance ahead of the record high being made. Speaking of record highs, we've got gold looking absolutely fantastic. Here we were looking for this market to hit 2180 by perhaps the end of this month, but it's accelerated, and basically it looks as though near-term support in the 2130-40 area, and heading for that 21 up to 2195 now at the top of that channel during the course of March. Moving on to the stocks, and starting off with Artemis, where we had a gap higher yesterday, and we've had a failed gap fill, which is actually normally a good sign. The initial target here up to 1.1 pence, hopefully over the next week or two, and then maybe by the end of the month up to the top of that falling trend channel from back in September, 1.5 pence. Andrada slowly coming out of its extended bear run, and here starting to gather some pace actually above the 50-day line there, around 4.5 pence. Above that we're looking for the top of that rising trend channel from December at 5.6 pence sometime during the rest of March. You can see there was also an RSI rebound off neutral 50, which is tends to be a leading indicator on the upside. So let's see if we're finally on our way there. Moving along to Avacta, where I suppose at the moment you could say the stock has done actually rather better than expected. I've been told that the actual placing stock is not actually on the market yet, so that might explain why we are rising. But an end-of-day close above the bottom of that gap there at 55 pence opens up 67 pence on a technical basis, whatever the technicalities are of the recent fundraise. Only well below the 50 level, which obviously was the placing level, would give us a nightmare scenario of a move down to 44 pence and a support line projection from basically this time last year. Moving on to Cadence, which is doing rather better than it has done for a long time as well. Here we've hit our initial target there, which was that resistance line there, May resistance line there around 6 pence. And we've also hit the 200-day line, so all that's left now really is 8 to 9 pence, basically post-July resistance, and hopefully we could see that as soon as the end of this month. On to Emmerson, where the share price keeps bouncing off this 200-day line, but actually what's more important is that it's bouncing above the 50-day moving average. That's rising. When you have that happening, it tends to be a leading indicator on the upside. Initial target here, 2.8 pence, but we're looking for the shares to finally fill that gap down from July around the 3.7 pence, and hopefully that could happen by the end of this month. Helium 1 had an update yesterday, and here you can see the shares trying to have a meeting with not only the floor of that gap there from the beginning of last month, 1.4 pence, but also the 50-day line. We would like to see the shares obviously find support above that 50-day line, but obviously they have to touch it, then rebound sharply after that. The worst case scenario at the moment, I suppose, is to go back down to the 0.75 area, which was the old gap top there. But at the moment, it looks like 1.3, 1.4 will hopefully do the trick on the current dip. If you're looking for the shares to turn up again, then the earliest momentum signal at the moment is around 2.4 pence, and we're quite a long way away from that. On to Harvest Minerals, and here the picture looks like a sort of an extended bottoming process. Nice sideways shuffle above a rising 50-day moving average that we have here, and initial target here 1.4, and then looking for the shares to fill that gap up to 2.1 pence, perhaps by the end of the next month, or even if we're very lucky, by the end of this month. But the upside or the recovery valid, at least while we're above that 1 penny level and the 50-day moving average. Harland Wolf is next. I think I had another announcement, a decent announcement this week. Bear trap gap reversal, and we're following through on that. We've also got a rising 50-day line now, 11.3 pence above that, looking for up to 14.75 pence during the course of the rest of March. A couple of new names now, or newer names. Just Group is here with a massive gap to the upside. You can see that it's finally broken that consolidation it's been in since basically the spring of 2021. We've gapped through that resistance line, and it looks as though we could head up to as high as £1.35 at the top of the rising October 2021 or October 2020 price channel by the end of next month. Upside value while we're above 90 pence, the breakout zone. The next stock is one that I don't think anybody's heard of, Kingswood, and here you can see it looks like we've got the start of a falling wedge breakout, just nudged the 50-day line as well. Initial target here up to the top of that falling trend channel from October at 13 pence, and then we can take a view as to how strong this market is. Obviously there's a gap to fill from September up there at 18 pence, which ideally would be done by the end of next month. MC Mining is next, and another potential recovery situation here. We had a bear trap gap reversal, and now we've had a sideways shuffle above a rising 50-day line, breaking that trend line there from back in April last year, and above 7.25 pence, looking for up to 11 pence by the end of next month. You can see the shares like spiking, even if it's only for a day or two, so maybe there's a spike day due on that situation. Metals exploration are doing rather well at the moment. Here we had our first target there around 3.4 pence, second one 4.3 pence, and we can now adjust our upside to a new resistance line there from the beginning of 2021, heading for up to 5.6 pence by the end of this month. Ideally, we stay on the right side of 4 pence, which is recent consolidation. As the cryptos are doing so well at the moment, it might be worth looking at quantum blockchain. What's interesting here is we've had multiple days with the shares finding support at and just above the 1 penny level. Confirmation of a turnaround, probably an end of day close above the 50-day line at 1.2 pence, and then the target 1.75 pence by the end of next month. But obviously we want to see this stay on the right side of a penny. SolGold, an obvious stock to look at the moment, given the state of the gold price, and here we've had the breakout there from a falling wedge, and we're holding above the 50-day line at 7.5 pence. Above that, looking for up to 12.5 pence by the end of next month. Next one is Sabient, which I haven't looked at as much as I should have perhaps, but we did actually hit the first target there at the top of that rising trend channel from back in September, 13.5 pence. Above that, on an end of day close basis or a weekly close basis, looking for 20 or 21 pence by the end of this month. The real sizzle here, I suppose, is the way we've cleared resistance around the 13 pence over the last 24 hours, in fact, over the last session, in fact, current session. Finishing off with a bit of an esoteric choice, here we've got Tower Resources, and The reason for inclusion here, apart from the fact that obviously it's been in a bear market for a long time, is that it looks as though we've got a sideways support shuffle along the 50-day line around 0.021. Above that, looking for the shares to spike towards the 200-day moving average at 0.31, maybe by the end of next month. If that happens, it would be quite an impressive charting call. That's it for me today. More updates over the weekend.